Good afternoon, ladies and gentlemen. Welcome to Business Today Television. And in our run-up to the budget, we start a series of sector-specific shows in which we pick up a particular industry and look at the prospects of that particular sector in the forthcoming budget, as also for the medium term. Our pick today is the logistics and transport space, which has been one of the huge success stories over the past 10 years as far as the BJP-led government is concerned. String of highways across the country, lots of expressways coming up, and the most important part, removal of octroi, the introduction of GST, FASTag, as also the eWay bills have made life easy for transporters such as TCI, represented by Mr. Vineet Agarwal, Managing Director of India's largest transport company, Transport Corporation of India. And of course, from the market side, we are joined by Ms. Ankita Shah. She's the Vice President and Research Analyst for the logistics space at Elara Capital. Good morning to you, Mr. Agarwal and Ms. Shah. What a pleasure to host you and discuss one of those wonderful success stories that we've seen blooming extremely well across the corporate landscape, which is the logistics and transport sector. Coming to you, Mr. Agarwal, we've seen dramatic changes happening over the last 5-7 years, especially the introduction of FASTag, as also eWay bills, and this fabulous network of highways, especially in North India, which have made life easy for truckers such as you. How has life changed over the last 5 years, and what are you looking forward to in the forthcoming budget that might make life better for you even now?
It's a pleasure to be here. I think for more importantly, life better for us essentially should mean life better for our customers. So for our customer perspective, what has changed for them is certainly the rigmarole of documentation that was there with what you just mentioned about eWay bills, the disappearance of certain checkpoints, etc., has certainly helped transportation as a whole. The other element of roads being available and also tolled, I think, has both sides. One is increase in productivity and efficiency, though there's also an increase in costs. The introduction of FASTags, etc. We did a study with TCI, with IIM Calcutta, where we found that trucks and vehicles were wasting about 88,000 crores a year just standing in paying toll. And if you remember at that point, toll used to be like 243 rupees. And so you're spending more fuel, burning more fuel in finding that 3 rupees to pay the person. And these are the things that we sort of highlighted, and fortunately the government has taken cognizance and has done a remarkable job of really linking the highways through this network. What has also changed is the growth of multimodal logistics. The infrastructure development has not only happened on the road side, but also on the rail side, on the sea side, which means that transportation can now move by multiple modes. And this is becoming more and more seamless as we go forward. The documentation element in like eWay bill, etc., helps that purpose. It also reduces cost for customers, and it is green logistics as well. Now, we as a company believe that this trend has to continue in the forthcoming budget. That is an investment into infrastructure. Infrastructure has a trickle-down effect of almost 3x into the system. It is going to lead to more and more creation of assets that are going to help the sector and ultimately reduce the logistics cost.
Yes.
See, we are 65% of our cargo today by road. Now, this is a number that is very high and needs to come down for us as a country to be more competitive. So going forward, expectation from the budget is clearly the infrastructure spend should continue. We should not be building for the past. We should be building for the future, because we've seen that whenever we build infrastructure, it gets used very, very fast. So we should be thinking long range for the next 25, 30 years and build infrastructure accordingly. And that would be a large expectation in the budget.
Okay. And Mr. Agarwal, if you look at the past 3 or 4 budgets, the capex that the government has put into make newer roads, better ports, fantastic airports, and of course it has this marquee theme to cut down logistics cost as a percentage of the entire cost of a product by half to about 3 or 4 percentage points. I'm sure we are headed in that direction. Getting Ankita into this conversation, Ankita, this is one sector which has been buzzing for the last about 3-4 years on capital markets, and I'm sure you are as excited as we are in tracking road makers, in tracking ports, in tracking airports, and of course movers of goods such as TCI. In your mind, what has been the dramatic shift that has happened over the last 5 years, and what are the couple of stocks you think are likely to do well over the next 2 or 3 years?
Yeah, thank you firstly, for bringing me on your show. So my thoughts are, over the last 5 years, if you look at the logistics sector, which is almost like around $240 billion size industry, has been growing at 10 to 12% CAGR. The key thing that has contributed to this growth has been twofold. One is the infrastructure development in terms of roads, railways, dedicated freight corridor, multimodal logistics park. The warehouses, larger grade A warehouses, have been able to bring down the overall turnaround time of the cargo because of better and faster movement of cargo. And second thing that has happened is positive government reforms in terms of one nation, one tax, that is GST,
Yes.
eWay bills, and fast tags, and GPS tracking of trucks. All this thing has helped to reduce the operational cost for the operators. So yes, two things: improvement in turnaround time and reduction in operational costs has been the key highlight over the last 5 years. Now, this has helped us to improve our logistics performance index from more than 50th rank earlier, almost 53 to 38 now. Now, what are we targeting over the next 5 years is continuation in this infrastructure and positive government reforms, and also add digital intervention going forward. In terms of higher double stacking operation, drone deliveries, and these are the things that mechanization of warehousing operations, fully automated warehouses, e-vehicles, LNG trucks. These are the things that we are seeing, that we are likely to see going forward. Hence, we expect that the industry will continue to grow at 10 to 12% growth CAGR going forward, and this would help us to achieve our larger two goals that the country has, in terms of one, reducing the logistics cost of the country from 10.5% to 8%, and improve the logistics performance index and bring our rank in top 25 countries in the world from currently 38.
Wonderful. I think this is squarely where Mr. Agarwal sits. Ankita, I must tell you this wonderful story. For the last 20 years, I have been tracking TCI, and on a regular basis, I chat with Mr. Agarwal. Believe me, he will tell you such stories on how life has changed dramatically for him. At the moment, TCI moves 10,000 trucks a day, of which
Yeah.
1,200 are owned by the company, and there are about 1,400 offices that Mr. Agarwal manages. Vineetji, tell us, how have life changed for you with this introduction of FASTag and eWay bill? What is the travel time that has been reduced between two major cities, which is Mumbai and Delhi, as far as the road is concerned?
In 2014-15, we had done a study again with IIM Calcutta on the operational efficiency of highways in the country. And we had found out that the average speed of a truck in India was about 56 kilometers per hour. And what that was, of course, pre the GST era and pre the checkpoints and so on. So all that has changed. However, I would not warrant an direct direct time sort of period. It has substantially reduced, I can tell you that. But however, you have to not look at it from the hub to hub, which is literally from the outskirts of the city to the outskirts of the next city, but you have to look at it from point to point. And that point to point could be inside the city. And the choke points still remain,
Okay.
trying to get out of the city or trying to get into the city. And that's where there is still a lot of work to be done. So, notwithstanding, there has been improvement in the long hauls, but on the short hauls, on the spokes as we call it, there is always a bit of pressure still. So I
Okay.
would definitely say that the improvement in this is in the excess of 10 to 20%, and that depends upon routes and sectors. In some cases, even more. So maybe 40-50% improvement in transit times. But what you rightly mentioned is the issues that were there related to stoppages, etc., that have gone away, and that makes it a much more friendly way of transportation rather than the tough times that we used to have in the past.
Okay, so let me just get this right. If you look at hub to hub, there are spaces where travel time is down by 50%, and of course, on average, there is a 20-25% less travel time on road for truckers. Is that a correct assessment over the last 5-7 years, Mr. Agarwal?
I would not say it on a national level. I would probably say that at about 10-15%
Okay.
improvement in because the bottlenecks still remain at the edges, and that is still taking time. I think, let me give you an example. In a city like Delhi, we have now two ring roads or three ring roads. A city like Beijing has eight ring roads. Now, that is the kind of traffic management that starts happening. That instead of the vehicles that are not meant for the city, don't go into the city. And like what's happening with the KMP, for example. And the aggregation points are outside the city, whether it is someone who needs to stock material a little further away from the city, someone who is in quick commerce might want their material to be stocked quite close to the city. So, like this, the distribution channels accordingly dictate where I need to be there with my warehouse. And that means that the choking of the city reduces substantially. These are the things that start happening as we are investing more and more into infrastructure. And this is true for the entire country and not just specific for a city like Delhi.
Okay. Ankita, India is setting up world class ports and improving its port infrastructure by a huge margin. As also, I believe airports are in place as far as size and the number of airports is concerned. That's pretty much done over the last 10 or 15 years. In terms of improvement of transport infrastructure, are you hopeful more on railways over the next 2 or 3 years, or are you more keen on the road side? You have newly listed companies like Delivery. There is a lot of work that is expected on Container Corporation of India. Adani Ports is doing a great job as far as linking of ports to the global space is concerned. You have the IMEC corridor coming up between India and Middle East. All this put together has put the entire sector in a fervent move. What, according to you, would be the top picks in terms of the medium term as far as logistics and transport are concerned in India?
Yeah. So I'll divide this into two parts. One is on the port side that you mentioned, for international air cargo movement. And now we have the new Vizhinjam port also come up, which is
Yes.
a transshipment hub developed by Adani Ports. And second part that you talk about is on the railway side. So, if you look at firstly railways, in 1950s we had nearly 80% of the market share of trade it was moving through railways, which, if you look at other developed nations, is not more, is higher actually. So we have and this market share of 80% has now come down to 20%. So we have an adverse modal mix with lower share of railways, which is a low cost and low carbon emission sector versus roads. This is one of the key challenge that the logistics sector is facing in terms of imperfect modal mix. Now we expect that this to change going forward with more investments to come in terms of more railway infrastructure, with more dedicated freight corridors connecting the golden quadrilateral of the country, which is high density and high network utilization areas. So those need to come up to balance out the trade mix and have higher share of railways going forward. Currently, roads have nearly 60% share in the cargo mix, and road has a higher cost of almost 2.5 rupees per ton per kilometer, whereas at railways it is around 1.5 rupees per ton per kilometer. So clearly this needs to change. And if you look at developed nations, they have not more than 45% of the cargo moving through road. But that said, we still need roads because of roads provide you with the last mile connectivity,
Yes.
which railways or ports or airports are unable to provide. Hence, for last mile connectivity, we need good roads, and we need to shift the modal mix for the longer transit times to railways. Coming on the port side, we have around 2,600 million metric tons of cargo capacity that is already port capacity that is already being developed, and we are at network utilization at around 50%, which means more ports, we need more cargo to come in. Hence, the government is focusing on Make in India, Atmanirbhar Bharat to push our exports, and that is where our utilization of ports will improve. And that is where I think connecting with IMEAC and Adani ports also going to international geographies and adding more ports, keeping India as the hub, will bring in more cargo in the country, and also our export opportunity will improve. So that's how I think the network will get better utilized on the port side.
Okay. Mr. Agarwal, this is where you come in right in the middle. Global supply chains, China plus one, and of course this mad animal spirit that's opened up into corporate sector brings a lot of business to your table. Now, what are your customers telling you in terms of setting a China plus one factory in India? What are they telling you in terms of managing their global supply chains? You do trucks, you do rail, you do sea, and of course, you also set up warehouses. How is the world looking to you 5 years from now as far as India's manufacturing sector is concerned?
The China Plus One strategy, as well as the PLI scheme, has really enthused industry as a whole. I think that has put definitely wings to the industry in terms of where they want to go now. We have a lot of interest from not just domestic companies increasing capacity, adding so that's brownfield expansion, greenfield expansion, and as well as new companies coming in, setting up plants across the country. And I think there are lots of industries that have opened up which were not there in the past. If you see things like the chemical industry, 10, 15 years ago, it was not a very large industry. Now it's becoming a very, very significant industry, not just from the domestic perspective, but also as an EXIM business opportunity. The second is defense logistics, for example, or defense per se. Defense was not an industry. We were importing everything, and now we are seeing that the country has already started exporting defense equipment and likewise. So that's again becoming a very large sector. Look at EMS, the whole manufacturing of cell phones in India, and subsequently semiconductors, etc. These are all brand new industries that have come up in the last, I would say, 5 years. And the future for these are extremely bright. So the interest that we are seeing is definitely a linkage that India is now becoming part of those global supply chains. India is going to capitalize on that global supply chain, and logistics will be the key factor in really moving things around, whether it is coming from overseas or going overseas or the domestic market themselves by itself. And you require not just different modes of transportation, but you require also warehousing. You need other kind of services along with it. And essentially, that would mean that investing into the infrastructure of logistics by itself. So I see a great potential with the China Plus One or the PLI scheme and any such kind of manufacturing incentives that are happening. Barring that, then we also believe that the agriculture sector will see a massive flip because the value addition there is now going to start going into various sectors like the QSRs and the food sector, into exports, into food processing, into so many areas where cold chain would be required, for example. So again, a very, very interesting area of growth also for the future.
Mr. Agarwal, let me just take this question a little further. Over the next 5 years, what would be the capex plan for Transport Corporation of India, just to tap these 5 or 7 sectors that you've mentioned, in terms of adding new trucks, in terms of adding new warehouses, and of course, adding newer modes of transport?
So we are adding ships and so on and so forth as well. So in the next 4 years, we are looking to spend about 1,000 crores into these assets. And in the last, this is the kind of investment we had probably done in the last 8 years in the past. But we are clearly, the story is bullish and we're looking to invest and capitalize on that by increasing our investment.
Fair point. Ankita, this is where you step in. Mr. Agarwal spending 2,000 crore rupees over the next 5 years to augment trucks, shipping lanes, as also rakes. Where do you think is the maximum money shareholders and investors will make in this universe? Will it be shipping companies which are doing fairly well? Will it be ports which have done dramatically well over the last 2 or 3 years? Or will it be, road transporters, rail financiers? I'm sure you have a crisis of plenty trying to rank companies which people should buy in order of great returns expected over the next 3 years.
Right. I think investors will have a bouquet of opportunities, and there has to be a balanced mix, across all sectors because if you see, logistics is kind of a GDP multiplier. It is growing faster than the GDP growth rate. The industry growth rate is faster than that because, of the multiple facets that the logistics sector caters to, not just in terms of industry but also in terms of modes of transportation, warehousing, storage. There are a lot of pockets where efficiency can be brought in, the turnaround times can be improved, and the costs can be reduced, leading to better profitability. So, we believe one should definitely have, rail logistics companies and,
Absolutely.
exposure to surface as well as on the shipping line side. That has to be there in the portfolio.
Wonderful. My last question to you, Mr. Agarwal, and this is to your biggest competitor, which is the Indian Rail. You also move about 3,000 rakes a year for automobile companies, for cement players, and other manufacturing units. Given the thrust that the Government of India has given on railways over the last 3 years, is this competition getting stronger, or do you see Indian Rail as a partner for future growth for logistics players such as yourselves?
We certainly don't see the railways as competition. It's a collaborator in the delivering the right product to the right customer at the right price at the right time. So clearly, we have been using rakes for automobile transportation. We own some rakes as well. We use rakes for container transportation for all kinds of cargo across the country. We move cargo by, let's say, by rail from North India to a port in like Kandla. We would put it on our ship, take it to the south of India, put it onto a truck, and deliver it to the customer. So really using multimodal fully. And with the DFC coming up, with other capacity addition that's happening on the railways, it's definitely going to be a boon for companies like us because we are so heavily invested in looking at multimodal logistics. About 10 years ago, we used to be 100% of our movement used to be by road. You'll be surprised to know now 30% of our movement is by other modes of transport. So this is a change that has already happened, and we are envisioning that this change will continue for the next decade. So we are definitely collaborators with the railways and not competitors.
Okay, wonderful, Mr. Agarwal. And we'll let the lady have the last word. Ankita, the final question comes to you. Just one stock in the logistics space over the next 5 years that should be in the portfolio of all new investors and existing ones.
Yes, I think that one stock should be Container Corporation of India. I think they are going to, benefit from the DFC. They are also getting into road transportation and all, and the world is moving towards railways, and that is where we believe, being a PSU, and with the largest market share company, we believe that over the next 5 years, the company is likely to do well in terms of earnings growth that can happen. Plus, it is a debt-free company, so healthy balance sheet and superior return ratios will ensure good growth continuing for the next 5 years as well.
Not to mention the fact that the government of India has put the divestment, the planned divestment of Container Corporation of India on the back burner. It helps existing shareholders a lot. Thank you, Ankita
Yes,
and
thank you.
Mr. Agarwal. What a pleasure it was to listening to such fantastic views on logistics and transport. I hope the outlines that you've made on the budget, as well as the hopes that both you have as a person tracking the sector and a person being the sector himself, pan out over the next 5 years. Thank you for joining us. It was a pleasure.
Thank you. Always a pleasure. Thank you.
That, ladies and gentlemen, was Mr. Vineet Agarwal, Managing Director for Transport Corporation of India, and Ankita Shah. She's the Head of Research and Vice President at Elara Capital, talking about their hopes and expectations from the forthcoming budget for the logistics and transportation space. Thank you for watching us. I hope you had it as much as I enjoyed talking to these gentlemen. Thank you.
How would you approach the IT stocks now? HCL Tech has also come out with its earnings. TCS, we saw a good set of numbers, and the market's rewarding the stock. About 7% higher the stock went up.